Ladies and gentlemen, brace yourselves as Wall Street plunges into turmoil, sending shockwaves across global markets. The U.S. stock market has been rocked by President Donald Trump's latest tariff announcement, wiping out nearly all of the gains since his election. The S&P 500 nosedived 1.8%. The Dow Jones Industrial Average sank by 649 points, and the Nasdaq suffered an even steeper drop of 2.6%. The trigger? Trump's declaration that tariffs on Canada and Mexico would take effect within hours, leaving no room for further negotiations. Investors had hoped that the administration would opt for a more diplomatic approach, but that hope was shattered. The market had been hanging on to optimism, believing the tariffs were merely a bargaining chip. But now, the reality is setting in. Monday's bloodbath on Wall Street is the culmination of weeks of uncertainty. The S&P 500 had been riding high on corporate earnings, but weak economic data signaled trouble ahead. Consumer confidence reports revealed growing pessimism, and Monday's manufacturing report only added fuel to the fire. The data showed a slowdown in factory orders and a rise in prices, stoking fears that businesses will struggle to absorb the cost of tariffs. Timothy Fiore, chair of the Institute for Supply Management's Manufacturing Business Survey Committee, painted a grim picture, stating that production is stabilizing, but demand is weakening, and companies are already feeling the operational shock of Trump's trade policies. The sell-off extended beyond traditional stocks. Tech giants, including Nvidia and Tesla, faced severe losses, with Nvidia plunging 8.8% and Tesla sliding 2.8%. Even the cryptocurrency sector, which saw an early morning surge after Trump hinted a new crypto strategy, couldn't escape the carnage. MicroStrategy fell by 1.8%, and Coinbase dropped 4.6%. Meanwhile, in China, importers rushed to beat the impending tariffs, temporarily boosting manufacturing orders. However, Beijing is reportedly preparing retaliatory measures, signaling that this trade war is far from over. Trump's new round of tariffs on China, raising levies from 10% to 20%, combined with the removal of the de minimis loophole for low-value imports, has intensified tensions between the world's largest economies. On the other side of the globe, European and Asian markets fared much better. The Hang Seng Index in Hong Kong edged up 0.3%, fueled by the explosive debut of Chinese bubble tea giant Meishua Bingsheng, which saw its stock soar 43%. In Europe, investor sentiment was lifted by data suggesting a slowdown in inflation, boosting hopes that the European Central Bank will cut interest rates. Germany's DAX soared 2.6%, and France's CAC 40 climbed 1.1%. Back in the U.S., the bond market painted a troubling picture of economic uncertainty. The yield on the 10-year Treasury note dropped from 4.24% to 4.16%, reflecting growing fears of a slowing economy. Typically, falling yields would signal investor confidence in Federal Reserve intervention, but with inflation concerns still looming, the Fed has little room to cut interest rates. The market chaos raises the question, is the U.S. economy headed for a recession? With uncertainty at an all-time high, the coming weeks could be critical in determining the fate of financial markets and the global economy. Stay tuned as we continue to bring you the latest developments in this unfolding financial crisis. Make sure to subscribe to our channel and hit the notification bell so you never miss an update. Like, share, and comment below. What do you think this market plunge means for the future? Let us know your thoughts.